Let's take a look at your markets now. Asian shares regained a measure of calm this morning as markets bounced after a searing sell-off last week and as investors pinned hopes on a likely coordinated global monetary response to help soften the economic blow of the coronavirus outbreak. The positive turn came after global markets took a pounding last week as the virus spread across many countries. Pandemic fears wiped out more than $5 trillion from a major global equity index, and stocks logged their biggest falls in more than a decade. So the sheer scale of the losses led financial markets to price in policy responses from the US Federal Reserve to the Bank of Japan and the Reserve Bank of Australia. Japan's Nikkei, which opened 1.3% lower at a 6-month trough, climbed 0.95% at close to finish at 21,344. The Hang Seng Index also managed to tick up, gaining 0.8% to close out at 26,339 points, while the Shanghai Composite was the biggest gainer, climbing 3.15% to 2,970 points. The S&P 500 fell for the 7th straight day on Friday, and the benchmark index suffered its biggest weekly drop since the 2008 global financial crisis on growing fears that the fast-spreading coronavirus could lead to a recession, although stocks cut losses at the end of the day's session. The Dow Jones Industrial Average fell 1.4% to 25,409 points, while the S&P 500 lost 0.83% to 2,954 points. The Nasdaq Composite managed to add 0.01% to 8,567 points. Let's go now to the Johannesburg Stock Exchange. My colleague Arabile Gumete is standing by. Very good afternoon to you, Arabile. Is there some good news where we are?
So unfortunately, not on the local market by the seams of it, Nzinga. Also a slight weakness in the local currency. But certainly we are feeling that impact then. The coronavirus is certainly impacting markets across the globe. As you said a little bit earlier, $5 trillion certainly being lost across global stock markets. And the hope is then that there'll be a coordinated monetary policy sort of stimulus package to kind of help the world. Will it be enough, though, is perhaps the big question. Let's consider, of course, that this is bound to hurt even those countries, just like Japan, which continue to suffer. They even had their manufacturing activity sitting in the doldrums, much the same as we do with our PMI data, which certainly is sitting much weaker as well. It's worse since 2009. The likes of the S&P 500, as you made note of as well moments ago, just also dipping there to levels last seen back in that financial crisis of 2009. So a lot of impact really coming through and hurt really for the markets across the globe really in trying to impact that market flow. Where exactly things go from here, though, one will certainly have to see and perhaps even begin to speculate. But that coronavirus is having heavy impact. On the local bourse, we've certainly seen the local index fall to about 51,000 odd. It's weakened the South African currency as well against the US dollar, and that has certainly meant that inflationary pressures are bound to be high, although we have seen a fall in the oil price, which does mean that perhaps we'll get a slight reprieve when it comes to the petrol price there too. So let's check in on how the numbers look across the globe, and we'll come back and check in on the details. Well, as you can tell, it's green everywhere by the seams of things there, so certainly is going to help somewhat. But is it a recovery, or is this just perhaps a little bout of positivity before things get back to red again? Let's chat to Gary Boyce and then from Rand Swiss, who joins us right here at the Johannesburg Stock Exchange as we update that market outlook. Gary, thank you so much for the time. So yes, fine, 1.8% higher. It's a good turn of events, but I suppose the sustainability of that is the question in mind now, considering that the coronavirus hasn't necessarily gone anywhere.
Yeah, certainly the coronavirus hasn't got anywhere. We're starting to see the numbers coming out of China, just how severe the economic impact is going to be. So we're still seeing, an increased number of cases in China, Italy, South Korea. The virus is certainly not under control. And if you read the academic literature and some medical opinions, they're now saying the virus is uncontrollable, or at least uncontainable. So there's a very good chance that this is going to spread even more widely. From an economic point of view, we can see the shutdown is having an impact, and market prices have come down, dramatically last week. We saw S&P 500 chalking up, I think, its worst week since the 2008 financial crisis, and this really in response to just the anticipated weakness in the Q1 numbers coming out of the majority of companies, I would expect. Today, as you said, we're getting a bounce. Is it a dead cat bounce? Is it an actual bottom being drawn under the stocks? It's very difficult to tell. I think the reason for the bounce, however, is really been central bank easing. So we've had the Bank of Japan coming out and saying that they would stand ready with ample liquidity should it be required. We've had the Fed, Jerome Powell saying echoing that message as well. And I think when the market sees looser monetary policy and they see a cash injection coming, they're prepared to bid up risk assets, especially stocks. I saw a report saying that I think it's Goldman Sachs now expects there to be a 50 basis point cut in the Federal Reserve rate come March, so this month, and that certainly should lift asset prices. But whether that's going to solve the problem of components not being delivered, of supply chains being disrupted, of factories being shut down, unfortunately not. Monetary policy can only go so far.
It really is just a plaster almost to what is really a really huge scab at this point, and one that seems to be widening as well.
I hope it's a scab, Arabile. At the moment, I just think that we're still bleeding. This is it's a band-aid on a wound. So I think potentially it can still get a lot worse. If you look at it, I know we're going to chat about PMI numbers in a little bit on the local front, which is still showing a contraction. But if you look at the PMI numbers out of China this morning, it's swung from PMI. You look at that key 50 number, above 50 and manufacturing is expanding, below 50 and it's contracting. It dropped from 50 to somewhere around 35. It's absolutely unbelievable, like the level of disruption in China for February, and because these are essentially February's numbers. This is the impact of the coronavirus is having.
And as you said, locally we saw those numbers also dip towards 2009 lows as well. So we're also sitting in doldrums here.
Absolutely. So our numbers, we haven't. Our PMI is higher than China's at the moment, which is
we're ever the optimists, aren't we?
Which is like unbelievable. But obviously, we're still showing significant pressure in our local economy. It dropped to, I think it's 40. I think it's 45 point, at least 44.3 down from just above 45. But showing basically a contraction in our manufacturing sector, and a lot of that, factors influencing that are just very, very weak domestic demand at the moment. Also, obviously, that's on the demand side. And then you've got supply disruptions, mainly thanks to load shedding and just the constrained electricity grid on the other side. So it's difficult in South Africa, but at least at the moment we're not shut down for the coronavirus.
Oh boy, look, we could have that delayed sentiment there, really. Who knows how we'll be having this conversation in a few months even.
Certainly
maybe completely different. You're quite right. Let's talk about on the equity front then. We saw news come out of Bidvest this early this morning. They've got their interim earnings out. A drawdown in those numbers. They had an accounting issue as well there. But their business has kind of changed a little bit.
Yeah, so looking at it, at Bidvest, Bidvest was always kind of the bellwether of the South African economy for me. They after the unbundling of Bidcorp and the separation of the two businesses, it really gives you a sense of what's happening operationally on the ground in South Africa.
Sure.
And I thought a very decent set of numbers out of Bidvest today. Now it's interesting when you kind of split out the different components of the business, because they've got everything from car rental businesses to where everyone always sees it ubiquitously, the Servest and Bidvest services. But interesting, the car rental is actually increasing, quite dramatically. We still saw pressure in other units of their business, but overall, I think a very decent set of numbers, given a very, very constrained economy.
What could be doing their car rental numbers up at this point?
Yeah, at this point, I'm not sure. So I don't know if it's because I wouldn't imagine that it was more local travel. I think the majority of car rental there. Potentially, people are selling their cars and moving to rental, because you look at the prices of a car rental and the prices of a new vehicle. cycle these
Yeah.
days. And it's almost equivalent.
Oh, interesting one there. Tongaat Hewlett, R3.50 a share now. They've fallen nearly 30% since they started trading almost exactly a month ago. And now they've decided to sell their starch business to Barloworld for 5.4 billion. Is there any hope for anything left in that business?
Well, we hope so. So one of the reasons that they're selling the starch business to Barloworld is just to try and shore up their balance sheet. You know, they're trying to pay down debt and just get the business on a better footing. I mean, remember, their shares were suspended last year, and just around accounting irregularities, the concerns about at least overinflated asset prices being held on balance sheet. So unbundling some of that, I mean, it will help to right-size the balance sheet. They have restated their financials. The stock is trading again, so it is, I mean, it is still a business that is going, and I think it's up to management now to really regain the faith of investors and show that they're a viable concern and a business that investors can trust and be part of for the next 5-10 years, and not just try and play a quick turnaround and a bounce off R3.50.
We'll see if things get any sweeter for them. Unfortunately, at this point, seemingly very rough. 1.6% up for the all share at present. Gary Boyce in there from Ransford joining us here at the Johannesburg Stock Exchange. It's around 15.65 for a US dollar. Seemingly getting weaker. We're going to test that 16 rand mark, it would seem. Hopefully we don't necessarily get there. That is